Canada is our largest trade partner. A deal without Canada is like an empty hole in this trade agreement. And so I do think, though in the markets kind of expected earlier in the week that we'd wrap this up in a nice little bow and go off to the holiday weekend, we recognize that trade is not a steady straight line. There's often stops and starts, and I think the market is having a more realistic notion of what it takes to get a deal done. And also I would say that fundamentals matter a lot here, and we're still seeing strong fundamentals from the corporate side, from the economic side, and that's what's driving and netting these forces of concern on trade overall.
Rick, strong dollar today, which is, I guess, as you'd expect on a day where the news on trade has worsened a little bit. But when I look at the statistics for the month of August as a whole, the dollar not really as strong as people might expect.
Consolidated.
No, I completely agree with you. As the dollar sits right now, we're just around 3% up on the year. And you were correct that it's had a nice little pop here. We're almost unchanged on the week on the dollar index, just by a whisker, a few ticks. The trade issue, really, most market participants, I think, can see through a lot of this. And believe me, there's a lot of clouds to see through. But at the end of the day, I don't think anybody in the investing community doesn't think Canada's going to come on board. But maybe for different reasons. Maybe not easy reasons to discuss. I know all day the theme of the show has been just because the U.S. can do something. Should we? Should we be nicer? I get all that. But business is business. You ever talk to two friends that tried to start and keep a partnership for a long period of time? That's the way it is. Is there any doubt that Canada is going to come on board? The question is when. And I don't think this administration is going to blink. And I think the market respects that. Investors understand that. And the media is having a party with that.
Yeah, Rick might have characterized it right for the markets because, Keith, we're not seeing a huge reaction. But next week, we start September, and this is just another uncertainty. We've also got a biggie when it comes to China, and nothing's finalized with Europe. And there's an impact, whether it's in this market or maybe more in the emerging markets and overseas markets that feel it harder.
I think you hit the right point there. We'll see what happens when we come back from the Labor Day holiday. As you pointed out on the lead-ins, it's pretty thin tape, pretty thin trade today, so we don't have the great moves that we would expect. Sure, we're going to get a few spasms here or there, but I don't think this tape today, this market today, really reflects what market participants may feel when they come back and really analyze the situation. I do agree with Rick's assessment, though. When you take a look at all the fundamental factors, all the technical factors that we're dealing with in the market, trade and tariffs are an important one. But you still got an economy that is booming. Corporate profits are the highest they've ever been. Markets are trading at all-time highs. The yield curve is still very favorable. You got a very accommodating Fed. Money is still flowing into U.S. equities like gangbusters. So those are other things that market participants are really dealing with, and they'll take the trade and tariff news as it comes.
Nela, when we consider those positives on the U.S., all well understood, and markets are up nicely because of it, when we look at Europe, down sort of 4% for the UK for the month of August, Germany's down 3%. Should people be taking some profits in the US and looking at some of these other developed markets, not even with the risks that some of the EMs have?
We think so. We think that valuations are favorable for international large cap, and this may be an opportunity as monetary policy is still stimulating Europe to really think about diversifying your portfolios with international large cap securities. We think that's a good opportunity.
Keith, in terms of the risks, trade is one. You're more concerned about the midterms, though. We're not focusing on those enough yet?
Well, I think we will when everybody comes back in September. I mean, the midterms are only 67 days away, and you really need to follow that story. The midterms have been a story the last few years, but I think it's even more important now. I mean, let's be candid here. The knives are out for President Trump, and they will remain out. And if the Democrats take control of the House and the Senate, which I have no idea if they're going to, that could certainly change the calculus of what we think politics will play into the market. As we've seen during the course of this year and last year, the market has ignored all the political wranglings going on in the kabuki theater that we get in Washington. But if the Democrats retake either one of the houses in Congress, that could really change the calculus. So I do think we need to start paying attention to that.